Frequency Podcast Network. Stories that matter, podcasts that resonate.
Hey, you're listening to the Big Story podcast feed. My name is Maria Castaigne. I'm the lead producer of the Big Story podcast, and we hope you're enjoying day 2 of the Friends of Frequency podcast feed. Today, host Mike Eppel takes you through 2025's biggest business headlines. We're talking about Trump, tariffs, energy trade, AI, the collapse of EV sales, and Hudson's Bay. We hope you enjoy this episode. You can find all episodes of The Big Story on the Seeker app or wherever you get your podcasts. Enjoy.
So there's an old market adage that says the markets have to climb a wall of worry. That's kind of been a theme for 2025. I've actually seen the stock markets hit record highs. And that kind of flies in the face of all of the potentially negative headlines that we have seen really since the start of the year. So we'll talk about how 2025 has transpired, some of the top business stories of the year, and maybe even do a little prognosticating into 2026. Welcome to The Big Story. My name is Mike Eppel. Joining me on the line is Professor Eric Kam from Toronto Metropolitan University to talk about the year in review almost. Eric, thank you very much for joining me.
Oh, thank you for inviting me.
Eric, you do these reviews and lists of top headlines, and you can go 10 to 1 or 1 to 10 or whatever. I don't think we can start with anything other than Donald Trump, because really, he has been the catalyst for both good and for bad for so many of the market fluctuations this year, how things have transpired in various sectors of the economy. And really, when you think back, it was before 2025 even started that Trump was musing about Canada as a 51st state and all of that, and how that led to, political changes here early in the year. And then subsequent to that, Liberation Day in the springtime. And boy, I thought at the time, all bets are off on how this was going to transpire, because initially, everything kind of tanked when he announced all of those massive tariffs, didn't it?
Well, it really did. And I think you're right. If we're being completely honest, in 2025, there's one story, right? Trump affected everything in the Canadian economy. The tariff threats, the America First politics, it froze investment and it kept the loonie under pressure as Canada just sat there waiting nervously for the next Kuzma shoe to drop. And I've never seen in the 25 years I've been doing this, one story dominates so much. And much like a snowstorm, it's coming, but we really couldn't prepare for not only the storm itself, but the fallout, which continues and has no signs of slowing down in 2026, Mike.
Part of the issue, though, too, was he would warn about tariffs, make threats, but then say, you'll find out in 2 weeks. He would announce something, and then immediately, the taco trade, Trump always chickens out. He'd say, well, we'll delay it for a month to see how things work out. And you'll find out then. There were so many, head fakes, from a business standpoint. The fact that, companies were hesitant to make any big investment, the fact that the labor market slowed down, all of these things, and how consumers reacted, none of it was really a surprise, considering it was just one curveball after the other.
That's really true. And I think that's why, in a lot of ways, as you started this, markets did better than the economy in general, because Canada's biggest export in 2025 became uncertainty. Mm-hmm. And we know that uncertainty, along with risk, those are bombs. Those are like dropping bombs into a capitalist economy. And so, for people that try to summarize or think in their head, well, what did Donald Trump really do to Canada and the Canadian economy? Is he just dropped massive risk and uncertainty right into the heart of the system, and that destabilizes, and it sets off destabilizing forces in every single market, whether it's labor, credit, money, you fill in the blank, and we're still feeling it.
Well, the fact that it was also very much, he announced these blanket tariffs, and then the initial reaction was, this is going to affect everything. At the end of the day, though, specifically here in Canada, because of NAFTA or CUSMA or UMSCA, whatever you want to call it, there were sectors that were hit much worse than others. Autos, steel, aluminum, forestry. I mean, those are those are the big four, I grant you. But when you look at how the economy did, there were big, winners. There were winners and losers, as there are in typical years, but more to the fact that it really hammered Canada's manufacturing sector more than others.
Yeah, it did hammer the manufacturing sector. It also almost eliminated, I use that term loosely, but Ontario's auto sector. I mean, see, the problem is, Mike, is that when there's this is called an exogenous shock. And generally in economics, when there's an exogenous shock, you get some winners and you get some losers. What makes this special is you've got to look long and hard to find the winners in this. And I mean, people joke, well, if you own a grocery store, you're a winner. But, it's been really, really tough this year. Our economy, it remains stable in one sense, right? We have inflation. We kind of have that under control right now. But as much as that's true, it's weaker overall compared with a year ago because growth is slower, the job market is less robust, trade tensions are really doing a number on output and confidence. And our government, is a little bit stubborn, right? They had a two-pronged policy for years. Let's use immigration and low interest rates as a growth strategy. They found out that the immigration one was a failure, as it's always been a failure. That never works. So what do we do? Well, unfortunately, right now, Mr. Elbows Up still has one policy. They just keep dropping the interest rate. Now, that's okay if you're obsessed with keeping consumption at a level that makes the business cycle look positive. That's fine. The problem is that approach doesn't create jobs. It doesn't increase what's called potential GDP. In a nutshell, it doesn't make our economy any stronger to produce more goods and services. And that's really what our economy needs, Mike.
Yeah, when you talk about the political implications, and how things transpired in Ottawa and, of course, at the provincial level with various, Ontario's got the blockade of U.S. booze, for example, and how that also, was headline driven on so many days where, Ontario at one point was threatening about cutting electricity power off to American, the northern states. I mean, that was who would ever have thought that would have been up for debate. But, the initial signals, and let's face it, the promise, dating back to the election campaign, was that there would be some sort of resolution on all of this by the summertime. It's the end of the year. There's no resolution. And now we're coming into a new year where it's, free trade is going to be up for renewal and renegotiation.
Well, that's right. And, you basically summed it up, is that we elected a prime minister who said, I am the best person to navigate the trade wars and deal with Donald Trump. And so far, there has been nothing. There really has been nothing even close to an agreement. So now we're going to move toward where they're going to reassess CUSMA, and all of our productive capabilities are going to look at how can we rearrange that. The problem here is almost textbook, Mike, is that Canada and the United States are not the same. They may both be capitalist societies, but one is a large open economy, and that has real implications when facing off against a small open economy. And so it's always troubled me since this has begun that Canada seems to be Doug Ford and the prime minister, we're going to take on these thugs and we're going to beat them at their own game. But let me let you in on something. You're not. You can't beat an economy that is so much larger than yours, has so many more trade partners than you have, and just in case anybody forgets, is geographically our closest, right? People say, well, let's create trade patterns with, parts of Europe and other parts of the world. Well, that's great. But you're talking about really tiny parts of our export agenda. And if you factor in the transportation costs versus getting things from the United States, it sometimes makes it untenable. We need a deal. I mean, I'm saying nothing that nobody else, everybody knows. We need a deal. And it's time that the rhetoric and the talking stops. I mean, businesses can't afford this type of uncertainty, as we said before. We need a trade deal with the United States.
I wanted to get back to the specific, as one of the top stories of the year in business, how the tariffs affected immediately, almost overnight. For example, the auto sector. We had, Stellantis and the Brampton plant is saying, well, we're not going ahead with the Jeep Compass project. We're moving that to the United States. The Cami Automotive plant in Ingersoll, mothballed. They were making EV delivery vans, and maybe the EV shifts as well. The collapse of EV sales also, of course, comes back to the Trump administration, because that was a complete reversal of the previous Biden. And again, here in Canada, what Carney's going to do with EVs and the fact we don't have any buyer incentives and such, that market is effectively collapsed.
Yeah, it's really sad what happened, right? The change of pace of EV sales. I mean, demand fell so sharply as the subsidies evaporated, the financing costs rose, and of course, consumer skepticism grew. And so now, our EV strategy, if we have one, faces a real reality check. Its policy ambition outpaced by a market readiness that wasn't there. And it's been a while since I've seen such hype become so silent. You're right. And you're right. I mean, it does go back to what's going on with the United States, but it's also just a huge policy shift by a government that you swear sometimes is making it up as they go along, Mike.
We've been talking a lot about the negative things of the year. Let's talk about if you had actually money in the market. Man, 2025, Toronto stock market was the top performer in North America. And who would have thought that, I think, at the start of the year, because typically Wall Street dominates. And the U.S. markets, if you were in AI specifically, you probably did great. But, again, Bay Street was back to banks, mineral companies, gold specifically, and the railways. It was kind of old school.
It was kind of old school, and again takes you back to the textbooks. Are not bad as models for an economy, right? Let's take those apart for a second. AI became completely embedded in daily life, right? Whether it's banking, media, education, and it helps to boost productivity narratives, right? Not yet productivity data, but we're gonna get there, and our markets benefited both directly and indirectly from U.S. tech exposure and domestic AI adoption, right? Even if we didn't have enough homegrown giants, but that's fine. Then you move to the stocks, right? TSX hit record highs, led overwhelmingly, shockingly, of course, I say that sarcastically, by the big banks, insurers, and dividend payers. Why? Well, safe havens, right? Those gains, in a sense, reflect rate cut expectations and financial stability, not as much strong economic growth, right? They're where people tend to run and hide when they realize that the economy is downturning. And look, as I said, for safe havens, banks in Canada, there's no greater safe haven. So, it's a testament to the fact that consumers are becoming more and more educated, and they realize when the economy that they see and they hear and they read is so topsy-turvy and so uncertain, where can you go for a little stability? And Canadian banks, if they offer nothing else, they offer stability. They offer a wide-ranging amount of things that you can purchase and invest your money, park your money, and know that at least when you go to get your money in 1, 2, or 5 years, it's going to be there.
Well, the TD Bank was one of the best performers. And I mean, you could argue that middle of the year, we sure didn't think that was going to happen, considering they were, dealing with money laundering allegations and charges in the United States. They had a major management shakeup. And after that was kind of put to rest, I mean, this stock doubled.
Yeah, yeah. And I don't want to minimize what happened, but in a lot of ways, for stocks that are, as entrenched as our big banks, our insurance companies, things like that, a lot of what you just mentioned, and again, I don't want to minimize it, but it becomes kind of white noise into the market. You get your knuckles wrapped, you pay a fine, but I don't know if that really affects consumer behavior and consumer confidence as much as the brand power of these banks. I mean, when you're driving, if you see a green sign, it's going to be TD. And they have become, for better or for worse, associated with safety, convenience, and stability. And again, I think that people are, they're craving stability. I think they elected a prime minister based on the desire for stability, and they're craving it. And, people are afraid. And if they're afraid of one thing in their life, except for the health of their family, it's the financial stability of their family. And I think they will turn to the banks every single time, because unlike problems in the United States a few years ago, our banks don't collapse. Our central banking system, we can criticize its decisions, but it's strong. And so I think that people are just looking for an oasis where they know they don't have to panic about one thing in their life. And if they go into any of the big 5 or 6 banks in Canada and buy bonds or buy T-bills, or even dabble in, ETFs or whatever, their money's going to be there when they go to get it. And I don't think you can underestimate that when markets are downturning.
I think there was more concern their loan loss provisions would be a lot higher than they were, considering what happened in real estate this year. We've had the Bank of Canada, they cut rates 4 times this year, 9 times total, and yet the real estate market across this country, Eric, has just been more abundant at best and brutal at worst. I mean, that was another situation where it was way overvalued, 2021, 2022. And this year was a real reality check for real estate, wasn't it?
Oh, my Lord, it was a real reality check. I mean, housing, you could argue that what's going on is a stabilizing. I'm not sure about that, but affordability, as we know, remains absolutely deeply broken, especially in big markets like Toronto and Vancouver. And rate cuts, they help sentiment, but they don't really fix anything, because if you make housing cheaper, then the demand for housing goes up. So, you see supply shortages. That was at one time a thing, and immigration pressure was a thing, and they kept prices elevated. But the supply shortages now are basically gone. Demand has gone through the floor. We've cut off immigration, and so you've taken away the parts that propped up the housing market. And so you can't, it's funny. Now, what are you going to do? I mean, people are going to say house prices are too high. Well, they still are on average, but they are coming down. You can't complain that the cost of borrowing is too high, because it's not. Now, you mentioned central banking, and, that's an interesting question, because I would argue that our central bank raised the rate far too high, far too fast after the pandemic. And then, frankly, I think it brought it down, not far too low, but far too fast after the pandemic. And I don't like that, because speed of magnitude really matters in terms of these things. So I don't question the directions they went in. They had to go up, and then they had to go down. But they went up so fast, and then they came down so fast that, again, you're just adding some real destabilization to the market. It's going to be interesting to see what happens to the housing market in 2026, and I know we're going to get there. I want to see if this predicted crash of housing prices happens. And I know people say, that's already started. Yes and no. I mean, the average price of a house in Toronto or Vancouver is still, well above $1 million. We'll see if that comes crashing down, Mike. But yeah, I mean, the housing market took a whack that no one saw coming in 2025. But in retrospect, when you take away the immigration factor, 500,000 people a year coming to major urban centers in Canada, it probably, looking back, isn't such a surprise.
A couple of other things I want to get to, Eric. One being, the end of the Hudson's Bay Company. I mean, it was Canada's oldest company, entrenched in the Canadian economy, and yet in all, it was ostensibly the end of the department store.
Yeah, but has there ever been a company more synonymous with Canada? I mean, maybe Tim Hortons, but the Bay. Well, let's face it, I was born in 1967. Anyone of my ilk calls it the Bay. And anybody born in 67 remembers very clearly when we had the Bay, Simpsons, and Eaton's. And they were the hub of any busy shopping plaza. And so for me, I thought about this, and the Bay's collapse symbolized, in a sense, the structural failure of legacy retail. Yeah, it was part of a cyclical downturn, but this is really a structural failure, something that is not going to get cured. As we say in economics, a structural failure doesn't just get cured over time like a frictional failure. No, this is what happens when parts of retail collapse. And of course, we can talk about the internet, shopping online, Amazon. But this really is a great sea change in the way that Canadians and really North Americans shop. And the problem with that is people say, well, no big problem because the Bay is gone. Here's Amazon and we're just as happy. Well, you can be just as happy, but urban commercial real estate and mall traffic, it's not happy because that's permanent demand erosion, right? Not all of the Hudson Bay stores are going to be taken over by realtors, and that's going to leave big, gaping, ugly spaces in a lot of big, hopefully nice Canadian plazas. And it's never, never is a long time, Mike, but that's never going to recover. I mean, the way that the ground has shifted for retail thanks to online shopping is really unimaginable in a sense. And I think that we talked about COVID before. COVID ramped up the speed of that, and I think it put it on steroids. When you tell people you can't leave your house, people get used to not leaving your house. And, some of things are never going to recover. And I know that the government thinks you can fix this by ordering people back to work 5 days a week, but the damage is done.
So, Eric, shifting focus a little bit and tying into one of the other big business stories of this year and how things may transpire in 2026, I want to talk about oil, pipelines, gasoline, because the fact is that the energy trade did not have a good 2025, in as much as the price for oil was, I think, down about 20% on the year. Consumers got a heck of a break at the gas pumps, some of that because of declining oil prices, but also the elimination of the carbon tax. That was also a thing this past year. And I'm just curious how this is going to play out. You've got the feds and Alberta with this memorandum of understanding to build pipelines. Are there economies of scale to build pipelines right now when oil is around, 50, maybe $60 a barrel at best?
So no, but there's a no and a but.
Okay.
So let's go back to so the carbon tax removal, of course, that improved sector sentiment. It made everybody happy, which is hard to do in an economy. And it lowered cost pressures and, revived some marginal investment in the sector. I mean, you could argue oil and gas benefited more from policy certainty than rising global prices. But let's not look a gift horse in the mouth in a sense. The price of gas went down. That puts a little bit of money in your pocket, and that's a good thing.
Looking forward to the new year, what are your thoughts on AI? My personal prediction is the sector is going to continue to grow. It's going to become more entrenched in our lives, by the minute. But I have a feeling there might actually be a consumer pushback against AI. And by that, I mean artificial intelligence that's kind of in our face, whether it's, from a media standpoint, bots. The word of the year was slop, for goodness sakes. The fact that AI can do these things and it doesn't get everything right all the time, and it kind of creates a mess in some situations. So I'm curious as to how, it's going to be further integrated for business use, but at the same time, whether consumers, does reality come back to the forefront maybe in 2026 as opposed to artificial intelligence?
It's funny. I think that you have to look at it two different ways. I think that in a business/investment sense, it will continue. It is the hot, sexy new thing. And, it's doing very, very well right now if you're an investor.
We had the first ever $5 trillion company this year for a few minutes, NVIDIA.
Yeah, for a few minutes. That's right. And so yeah, exactly. So I think you have to look at it two ways. I think that the investment angle will stay strong, but I think you're actually right about the consumer sentiment. And here's what I mean by that. I've often said for years that, say, the X platform or Facebook, they are super popular because they're super free. And I think that, and I've said this to my wife, if Facebook wanted to charge me $1 a month, I would get rid of my Facebook account. It isn't worth $1 a month to me. And I wonder with AI how much it's worth to the consumer. How many people would actually pay to use it? And I think it's that I think you're talking about in the sense of pushback, because I think that more and more consumers are saying, what does this really, what's the value added to this of my life? And I'm talking about people, say, my parents' age, or, well, hell, even my age. You can see the investment angle in this, of course, and maybe students will pay for AI because it's thrown my sector into a tizzy like you can't understand. In fact, we've thrown up the white flag. We don't know what the hell to do. If you're in a higher education, we don't know what to do. Let this, by the way, you have kids in university. Don't believe it for a second when their school tells you they have an AI policy. They don't. They have no idea. But I think it's would you pay to use it? Does it make enough people's lives better off that there'd be widespread investment in terms of X number of dollars a month to buy it? And that's, I think, where you're going to see a slowdown. I think that more AI companies may start to want to charge for even the basic of their platforms. And I think then you're going to see people say, you know what? I don't know if this brings enough to my life. Again, like my example for me would be Facebook or the X platform. If I had to pay, they'd be gone.
And I think that's going to be likely something that we see more of. Listen, this has been a great discussion, Eric. I appreciate you very much joining us. And yeah, you said you're in the sunny south, so enjoy that as we continue to freeze up here. Happy holidays.
Nothing but the best of health to you and your whole family. We'll speak in 2026, Mike. Thank you for the invite.
That was Professor Eric Kam from Toronto Metropolitan University. And that was The Big Story. We'd love to hear your thoughts and feedback on this or any of our other episodes. You can email us at hello@thebigstorypodcast.ca. You can reach us on Blue Sky at The Big Story. And don't forget to rate, follow, and share The Big Story podcast to your friends on social. You can listen to The Big Story every day on the Seeker app or wherever you get your podcasts. My name is Mike Eppel. Happy holidays. We'll talk to you again in 2026.